What's going on YouTube? Welcome back to another edition of Currency Counts, where I cover all things money. In today's video, I wanted to show you a product that can raise your credit score with as little as $15 down. Let's check it out. All right, so here we are at the Credit Strong website. So let's take a look at some of the features of this product. Apply in minutes. We instantly give you a bank loan and place the funds in an FDIC insured savings account in your name. Funds are locked to a secured loan. Make small monthly loan payments. As a bank, we report your payments to the 3 major credit bureaus, building credit history each month. Track your progress. We provide a free FICO score monthly so you can track your progress. 90% of top lenders use FICO scores when making decisions. Unlock savings. When your loan is repaid in full, the lock is removed from your savings account. You've built both credit and savings. So there's going to be a few different tiers. The first tier here is going to be the subscriber tier, which is subscribe 1,000 and subscribe 2,500. So the 1,000 is going to be a $1,000 installment account reported on your credit report. Subscribe 2,500, the same thing, but with $2,500. This is good if you want to take baby steps and you really don't want to spend a lot of money. But once you start looking into it, this subscribe 1,000 and 2,500 is a customizable payment term up to 120 months. Which 120 months translates into 10 years. So I wouldn't want to be wrapped up in a payment, even if it's as low as $15 a month for 10 years. So we go to learn more here. We're going to see the monthly payment is $15, but look at the interest here. It's $10.68. Yes, it keeps going down every year, but the majority of your payment is going to be for the first few years, it's going to be going towards interest. So the APR is 13.5%. So in 10 years, you're going to be paying $1,800. So you're going to be paying $800 in interest on this loan here. So subscriber 1,000, subscriber 2,500, I wouldn't go with. So let's go to the next tier here. So this next tier is build and save. So build and save 1,000, 24 months. Build and save 1,000, 12 months. Build and save 2,000, 24 months. So the one that I would look at here is going to be the build and save 1,000, 12 months, because it's going to be the quickest way to get the account reflected as paid satisfactory on your credit report. So let's go to the third tier here. So the third tier is going to be Magnum 4,500, Magnum 9,000, and Magnum 18,000, which you get the idea here. So the 4,500 is $4,500 installment account, $9,000 installment account, and an $18,000 installment account on the Magnum 18,000, which is $198 a month, and that is a term of up to 120 months. So the Magnum tier, let's see what it includes. So it says right here, supercharge your personal credit history for business purposes. Demonstrate repayment on larger credit obligation. Customize your payment terms to be up to 120 months. Build savings of up to $4,500. Cancel anytime with no penalties. So what happens on this product if you're going through with it, right? And let's say you're 2 years in and you all of a sudden lose your job and you can't make payment anymore. No harm, no foul. It doesn't go negative on your credit report, but what does end up happening is all that interest that you paid, you don't get that interest back. They keep the interest. And for example, on the $4,500 loan amount, your average interest here is $20.99, which you're making your payment of $49.50. So that's more than half of your payment. So one little thing that you're kind of led to believe here, which is not true, is the higher the credit amount that you have, the higher your credit score will be. For example, if you say, well, I want my credit score to be really high, so I'm going to go with the Magnum 18,000. which is $198 a month. And now my credit score is going to go from 500 to 700. That's not true. That's not how it works. You can take out a $100 loan and keep flipping that. Take out $100, pay it off, flip it, come back the next day, do that time in, time out, do it about 10 times, and you're going to see your credit score go up. You don't have to take out $4,500 loan, $9,000, $18,000 loan. You don't have to do that at all. You can do it with as little as $100. So this Credit Strong product is another form of an estate loan. So what an estate loan is, if you're not sure, you go to the bank, let's say you want to take it out for $500. Okay, all they're going to give you is your note, your coupon book to make the payments. You're not going to receive any money off the top, just like this product here, Credit Strong. But usually an estate loan, the terms, the APR is really low. It's going to be below 5%, no matter the amount that you want to take out. The main difference I see here is the APR, your interest is going to be a lot higher. On top of the interest being higher, once you pay everything off, your balance, your 4,500, whatever it is, it's going to roll over into a savings account. An estate loan, once you pay it off, you get that lump sum. Okay, it's not rolled over into a savings account. And once it goes into the savings account here from Credit Strong, what's going to happen is you're going to start being charged a monthly savings account fee. So then you say to yourself, okay, well, why don't I just go out and take out an estate loan? But if you're trying to build credit, a lot of banks, what they do is they run a credit report. So you might not qualify for a checking account in that particular bank because you have to be a member to take out an estate loan. And not all banks offer estate loans. It's usually through credit unions, and credit unions, they're definitely going to pull a credit report on you before giving you an account. So a product like this may be your only option as far as rebuilding your credit. So another thing you might be thinking is, well, why do I need this product if I already have a secured credit card to rebuild my credit? Great. Secured credit card will definitely boost your credit score over time, but you are going to want to have a good mix of credit. A secured credit card is an adjustable term loan, and a product like Credit Strong is going to be a fixed loan. So the difference is with the credit card, 1 month your payment can be $25 because you have a $200 balance. The next month you use your credit card, now your payment is $45. So with the fixed loan, if terms are $15 a month, it's not going to change. It stays at $15 a month for the term of that loan. So let's read some of the reviews here. 1 month up 29 points. Next, my credit score has gone up 91 points since I started 3 months ago. Pushing 700 now. This product is awesome. So in my opinion, there's going to be better products than Credit Strong to rebuild your credit, just for the fact that the APR is kind of high. But I just want to make you aware of the product and show you different options that you do have to rebuild your credit. So if you haven't already, be sure to like and subscribe. I do a lot of reviews on websites just like this one, and a lot of other tips and tricks on how to rebuild your credit and make more money. So I want to thank you for watching this video. I hope this helped you out. Check you on the next one.